Have you ever thought about getting into the Indian stock market but just didn't know where to even begin? Well, this is for you. We are going to lay out a super clear step-by-step roadmap so you can make your first moves with total confidence. Let's dive in.
Does this question sound familiar? Yeah, I thought so. You see the headlines, you hear your friends talking, but the whole process just feels kind of overwhelming, right? Don't worry, you are in exactly the right place. We're going to cut through all that noise and give you a simple, straightforward path to get started. So, our journey today is split into 4 simple phases. First up, we're getting your gear ready. Then we'll learn the rules of the game. After that, we'll talk about making your first moves. And finally, we'll cover how to play the long game for success. All right, let's kick things off with phase 1, getting your gear ready. Seriously, think of this as the prep work. You wouldn't just start climbing a mountain without the right equipment, and you definitely shouldn't jump into the market without this foundation in place first. Okay, so what's in this essential kit? Well, these first 3 steps are totally non-negotiable. You absolutely have to have a PAN card for any transaction, and you need an Aadhaar-linked bank account for verification and, moving money around. Once you have those, you'll open 2 really important accounts. A Demat account, which is basically a digital locker where your shares live, and a trading account, which is what you'll use to actually buy and sell. The last piece of the puzzle is your KYC, or Know Your Customer. It's just a standard online identity check. Now you've got your first big decision to make. Which broker to go with? It really boils down to 2 main choices. On one hand, you have discount brokers. Think super low fees, a slick app, and a more do-it-yourself kind of vibe. On the other hand, there are full-service brokers. Yeah, they cost a bit more, but you get things like research reports and actual advisors to help you out. Which one is right for you really just depends on how much handholding you want. With our accounts all set up, it's time to roll into phase 2. Learning the rules. This is all about understanding the arena you're stepping into before you risk a single rupee.
So what can you actually buy and sell? Well, equity is the most common. That's when you're buying a small piece of a company. Then you've got ETFs and mutual funds, which are like pre-made baskets of different stocks. Honestly, these are fantastic for beginners because you get diversified instantly. And way over on the other side, you have derivatives, like futures and options. These are much, much higher risk and really should be left to the pros.
It's also super important to know when you can trade. The main show for the Indian stock market runs from 9:15 a.m. to 3:30 p.m. Monday through Friday. Simple as that. While there are some other sessions, that 9:15 to 3:30 window is really your prime time. Now, here's something that catches a ton of beginners by surprise: the hidden costs. See, it's not just about your broker's fee. Every single trade has these little charges tacked on that really add up. Things like securities transaction tax, stamp duty, GST, and a few others. Just knowing these exist is the key to figuring out your real profit or loss on a trade. And, of course, taxes. The big thing you need to remember here is how long you hold onto your shares. If you sell within 1 year, your profit is considered a short-term gain, and it gets taxed at 20%. But if you hold for more than a year, it becomes a long-term gain, taxed in a much friendlier 12.5%. It's the system's way of rewarding long-term investors, and it can make a huge difference to your strategy. All right, now for the exciting part. Phase 3, making your first moves. You've done the prep, you've learned the rules, and now it's finally time to get in the game. But we're going to do it with a super clear focus on strategy, safety, and starting small. So, what should that very first trade be? Let's keep it simple. Start with blue chip stocks. We're talking about the big, stable, household name companies. Or even better, think about an index ETF that tracks the Nifty 50. That way you own a tiny piece of the 50 biggest companies all in one shot. The main thing is, avoid the temptation of fast-paced day trading and complicated stuff. You could even practice on virtual trading apps first, just to get the feel of it in a totally risk-free sandbox. Before we go any farther, I just want you to let this sink in. This isn't just a friendly tip. It's the single most important rule in all of trading and investing. The market has 0 guarantees. So only put in money that, if the worst-case scenario happened, wouldn't mess up your financial life.
So how do you actually put that rule into practice? It all comes down to this number. A core principle of managing your risk is to never, ever bet more than 1 to 2% of your total trading money on any single idea. This discipline is what saves you from a big, painful loss and keeps you in the game for years to come.
Building that safety net really comes down to a few key habits. Number 1, always use a stop loss. It's just an automatic order that sells your stock if it drops to a price you decide, putting a cap on your losses. Number 2,
Diversify. Don't put all your eggs in one basket. And number 3, this is the hardest one. Do not let your emotions call the shots. Fear and greed are a trader's worst enemies.
And that leads us perfectly into our final phase, Phase 4, playing the long game. Look, success in the market isn't about one lucky trade. It's about building consistent, smart habits that lead to sustainable growth over time. The market doesn't exist in a bubble, right? So you've got to stay informed. That means keeping an eye on the big picture stuff, like RBI policies and the union budget. You also need to watch for any rule changes from SEBI. And of course, keep tabs on other companies and sectors you've actually invested in are doing.
Okay, this might be the least glamorous part of trading, but trust me, it is absolutely critical. Good record keeping is your best friend. Save all the contract notes your broker sends you. Keep a log of your trades. This stuff is essential for filing your taxes correctly and just staying out of any trouble down the road.
So let's just recap the entire journey real quick. You start with your setup in KYC. Then you learn the rules, the costs, the taxes, the timings. You make your first moves by starting small and safe. You commit to staying updated on what's happening, and only then, once you're comfortable, do you start to scale up. Remember, it's a marathon, not a sprint.
And there you have it, a clear, actionable roadmap to start your trading journey in India. The path is all laid out for you. So the only question left is, what's your first step going to be?